Welcome everybody to our third edition of 144 and 360, where we'll try and get this done in under 6 minutes. And in this one, we have the NASDAQ futures nearby that we're going to use. Why this becomes important to our premium grain members is for two reasons. One, this is just showing you how what we believe, and that is that the Fibonacci retracements are the underlying structure of all markets, and we'll try and prove it here even more. And two, that we haven't seen this kind of a down move in the grains yet. When and if it happens here, this is what we're going to be looking at. Just how, whereas we're holding all the retracements underneath currently in the grains, you're going to start to see the reverse here on the way down. And this should be a good example of it. Here we have the all-time high. We come back to 23% of a move. Market goes up, fails to make a new high. Number one, a sign that, something's changing here. Two, it's that it hits 78.6%. Now, this rule in itself can either be just that it goes 78% of the last move or be the end of the bull run. In this case, it was both so far. It took this market down after failing to make the new high, took it down, went to 38% of this move, nothing. We saw the change in trend happen up there too. You got another retracement here that it just takes out, and then this rally here comes up into 38% and a major Gann square, but we're dealing with the Fibonacci retracements here more importantly. 38%, a day above it, another day, but then right back under it. Second attempt, one close above it, right back below it. And here they tried to make a turnaround at the 78.6 to just the reverse of what happened up here. And this rally could only take it to 61.8, still not taking out 38% and down to new lows. Where this market came into were some huge numbers going back to 2020's low and 2009. It was 23% and 38% in this zone right here. First attempt hits the top end of that range, goes 38% back, gets stopped. Never a good sign when a bigger retracement from a bigger area stops you. A shorter one stops you from that bigger one. This put it down to a new low, only slightly, and therein lies one of the rules within our 144 rules and guidelines as to when you only make a slightly lower low after hitting 38 back and reacting, that getting back up into here should send you 61.8, and that's exactly what they did. Now here we have a miniature version of this thing turning lower again, and that was that it held 23% of this move, goes 78.6. Again, just a miniature version of what we had happen up here at the all-time high. Market turns lower, 38's doing nothing. But another rule, 61.8, should usually send you 61.8 the other way. That was completed here. When it hit 61.8, we would have been looking again. Could have gone 61.8 back to that high if it was going to stay in a trading range. But all it could do was go 38 back. And again, new lows. Come into the third time into this major support area. And as you see, we couldn't even get 38 back. Or 23% back to the to this move. To the all-time high, just showing you how weak again it is. The bigger levels below can't even get up to numbers up above. So the next thing, we take it down to new lows, 23%. This market could only go 23% to this high, not even the extreme. That's how negative the market is. We make new lows again. And then we get a decent rally, come up into a combination area of 23% back to the all-time high and 38% of this leg right here. So as you see, 38% stops this market, and what happens? But they fall off hard into new lows, as you would expect from 38.2. Now, what are we looking at here? But 38% and 61% of the 2009 and 2020 lows. Huge area down here to watch. Does this give us just a little bounce or something back up into 23%? You would expect that this could send us back pretty hard or pretty fast up higher. But that's why we'll watch all the retracements on the way back up to see just how weak or strong the market is. And if it can't get above, this should be able to take it to 38 back. Let's just put it that way. Anything that falls into the 23%, which is still has to be determined, is going to be a very negative sign, and we got a lot lower to go if this level here gets taken out. So just following the retracements, you can see how this market is just reacting day in, day out to these levels. You can also see our Gann squares here, which we give on to our grain premium members. We alert them to every week. They're awesome things to use in the market. You can see how this market just moves back and forth from it. And hopefully, if you do trade the grains, you'll come and join us as a premium member. And if not, good trading.